Welcome to Raise Your Average. I'm Pierre Daly, managing editor at advisoranalyst.com. My co-hosts are Mike Philbrick and Rodrigo Gordillo from Resolve Asset Management SEZC. And our special guest today is Atul Tiwari, CEO at Cult Wines Canada.
The views and opinions expressed in this broadcast are those of the individual guests and do not necessarily reflect the official policy or position of advisoranalyst.com or of our guests. This broadcast is meant to be for informational purposes only. Nothing discussed in this broadcast is intended to be considered as advice.
Atul, welcome to the show. It's great to have you.
Thanks for having me, Pierre and Mike and Rodrigo. I'm looking forward to our podcast.
So,
yeah, us too. It's probably one of the most favorite topics I have besides investing. When you can put wine and investing in the same breath, man, we're talking.
I love it.
Very good.
Atul, for those of us who don't know you, please tell us your story, the story of your career, how you got your start in the investment industry, where you've been, and what you're doing these days at Cult Wines Canada.
Sure, Pierre. So I'm a reformed lawyer. I used to practice corporate securities law. I worked in-house at BMO as preferreds. And I was essentially running the legal compliance group in London, UK, for a few years. And when I came back to Canada, I wanted to transition out of the legal world and into the asset management world. So I was fortunate to get a role in BMO Asset Management and spent a couple of years running the U.S. mutual fund business for BMO out of Harris in Chicago, and then came back up to Canada. And actually, I was thinking about it today. 20 years ago, this summer was when I first pitched the executives at BMO on BMO ETFs. I was quite passionate about ETFs and thought that's the future. Let's get started. And I didn't succeed on that first pitch. Didn't succeed on the second one, but on the third one, I did. And so I was fortunate as well there to lead BMO into the ETF business. And I think everyone's quite pleased ever since that happened. For BMO, I went on to Vanguard. So it was hard to start up Vanguard in Canada, which was a great experience, 7.5 years. And built a pretty good franchise. We had 58 people or so on the team when I left, and about 30 billion in assets. So a lot of time spent in the ETF world, and now I'm doing something different. So I was always interested in wine, quite wine passionate. Obviously, I love investments, and I knew that there was a wine investing culture in Europe and Asia. And I was always curious as to why this hadn't developed in North America to any large degree. So I put together a business plan and researched who was the best out there in the world doing this. And Cult Wines, by far, to me, was the best in the world. So I reached out to them last summer and said I was looking to start something in Canada. And we had some great conversations that led to a joint venture, and we launched a wine management business, wine portfolio management business in Canada in April.
Wow. Awesome.
Amazing.
What a journey, eh? So yeah, you're behind some of the BMO ETF magic. I did not know that. That's it was always odd to me how and why BMO got into the ETF business as early as it did. It seemed way too entrepreneurial to fit within that BMO framework, but that's amazing.
Well,
go ahead.
Sorry, just hand it to the head of wealth at the time was Joe Willette, and eventually, when we did make the decision, he had come down and said, I'm talking to a lot of advisors who are interested in ETFs. And if this thing starts building, I'd rather lose assets to myself than to a third-party ETF company. So, it was good foresight on his part and the rest of the team as well.
Yeah. Blockbuster could have used some of that advice when they took on Netflix. Totally. So cult wines. Let's back up. So you brought the cult wines concept to Canada specifically, but let's talk a little bit before we jump into the specifics of that. Let's talk a little bit about wine, the wine market, how that functions. This is such a unique market, and I think it is topical at the moment, in particular because we have this. Bringing this back to the global macro sort of framework and side of things, when you have, an excess amount of money printed, whether that's for COVID or for building bridges, that debasement of the currency causes the value of things that are rare, hard to produce, not easy to replicate. It causes those things to go up in value. And that has not been lost on things like the art market and the wine market recently. And so we've seen a pretty robust reaction in wine markets. And this is not the first time this has happened. Like, if you're making $10 a bottle of wine and, most of that $10 is marketing, sales, and fulfillment, you've got lots of profit margin that you can give up in order to continue to facilitate selling $10 bottle of wine. That $10 bottle of wine is not going to go up a lot in price. You might cut a little bit of an edge here and there on the production. You might up the advertising, but at the end of the day, that type of asset is not going to appreciate. However, a, left bank Bordeaux has a limited supply. There's a limited amount of land there. There's a limited amount of wine that's going to come out of that region. And that wine region has, hundreds of years of demonstrated expertise in producing wines that are, and I am a wine elitist. I have these discussions all the time. So let me just declare that I'm a wine elitist and the best wine comes from France.
Okay. So when you mean the left bank, you don't mean like Israel and Palestine. You mean like, so please, I will help the audience navigate this landscape.
Rod, just
all right, audience, you're going to need to Google it. So left bank, France, so is you're just kind of talking about a specific well-known Bordeaux.
Well, we have rare areas of the world, the Bordeaux region, that produce really exquisite wine. And that wine is rare. It's like the Mona Lisa. It's, there's not a lot of it. There's a certain amount of it that comes with the region. So when you get into the debasement of a currency, it's quite likely that those rare assets will do better than sort of your $10 wine. And so I'm wondering what's been the journey? How are the wine markets functioning? Maybe take us back a step, cult wines, talk about the futures and how that process works a little bit. I know I put a lot on the plate there.
Yes, things won't take.
But over to you. Sorry.
Great. No, I'll try to answer all those questions. Maybe I'll just start really quickly with Cult Wines. So Cult Wines was founded in 2007 by our global CEO, Tom Gearing, and his father, Phil, in the UK, and has grown to now have 6 offices around the world, including Hong Kong, Shanghai, Singapore, and New York recently, and of course, Toronto. So 300 million in assets, which we think is the largest portfolio management company in the wine space. So that gives us scale. And we have a little over 70 employees globally. So a pretty good operation. In terms of, how does it work? I'll just talk maybe a little bit about what you said, Mike, which is it kind of comes down to a very simple equation of supply and demand. So we all remember economics in university, and basically fine wine works right alongside that principle. So we estimate that out of the $450 billion worth of wine produced every year, probably about 1% would be considered investment grade. So that's about $4.5 billion every year being produced. So right away, you've got a bit of scarcity in that number. And then you look at how the market works, and it's very fragmented. So one producer may have a number of different distribution channels through which to sell their product. And then they have to, if they're a global player, think about their brand and distribute across a number of geographies. So when you get wine into the hands of the consumers, again, it's pretty fragmented. And if you've tried to get some of these great labels, you may find that you're on a waiting list. You may not get any, or you may get allocated if an agent is feeling good about their business that year, you might get a few bottles allocated to you. So the opportunity there for a company like Cult is the fact that it is a very fragmented market globally. And quite frankly, it's fairly opaque at that level. So there's a lot that we can do to make it more accessible and more transparent, which is what we're doing. So that's a little bit around how the market works. And for us, again, because of our scale, we tend to have greater accessibility and relationships with producers. And in the UK, we will actually be agents for a number of the iconic names. So we do get direct allocations into that market. The futures market that you talk about, Mike, isn't in the classic securities sense, or rather, as you know, what we're doing is investors or consumers are buying wine that is actually still in the barrel. So Bordeaux runs a very big campaign. In fact, we're sort of right in the middle of it right now. And you'll buy a future, which essentially entitles you in 2 years' time to receive the delivery of the physical bottle of wine, in our case, in your investment account. And you get a lot of left banks. And this current 2020 vintage is being really touted as a right bank vintage year. So you can also focus on that area.
So just so I understand that you're buying
both banks. So yeah,
sorry.
It's called on Premier.
Yeah. On what?
That's
on Premier.
Futures market is called on.
That's I don't have the So just so that I understand in terms of the futures market, this is an over-the-counter futures market where you're buying directly with this is not in the CME or anything like that, is there? You're just literally buying future interest in a lot. And then when you get it, you can either, I guess, is it a fungible futures contract? Is there a market for us to resell instead of getting delivery?
You could resell. Most people don't, because really the idea is it's a bit of art and science as to how pricing is set. So when you look at last year, 2019, the 2019 vintage of Bordeaux, it was being released right as COVID was taking root across the world. And so the wine producers essentially reduced prices about 25 to 30% from where they probably would have priced had COVID not struck. And so what we were interested in seeing was, okay, now we're a year in, what are the prices going to look like for the 2020 on Premier futures? And so it takes a bit of analysis, and we do our own work around, is there quality for the price, what we think things will come out at, what they should come out at, and then we look and see what they come out at, and then make recommendations to our clients as to which ones we think are value buys, and which ones, quite frankly, are not. The good things for the investment industry of wine is that the wines are being priced off a lower base of 2019 coming into 2020.
Right. There's a nice little base effect there, yeah.
And I think another thing, so one of the advantages, Rod, you're buying this wine when you're buying in futures, it's literally in the barrel. It hasn't been bottled yet. And so you're going to get, bottles of wine, and it's, largely you get some sort of discount for that, 20 to 30% discount by buying it as a future rather than bottle.
Yeah, you're taking the risk. What is the risk you take?
Classic futures.
The risk from going from barrel to bottle, as well as the risk of it being received poorly. So nobody's tasted this wine, right? I'm sure there's insurance. Maybe I got the first part wrong. I'm sure there's some sort of insurance if it all goes badly.
No, nobody. There has been tastings of the wine. So the winemakers are deep in the cellar. they're rolling those barrels over. They're taking their little, tools out.
It's like
they're
that.
called. But
And so there's already an indication of their quality, and I'm sure comps to similar tasting wines and what they should go for as you're going to buy the future.
And that's right. And
you also know the weather, right? You know the rainfall you got both during the winter and during the harvesting season, and the heat units over the summer that were there to create the sugar in the wine, and then you've got the technique of the winemaker if it's a Bordeaux region that can blend and whatnot.
I would also echo what Mike said. So some of the critics will have tasted barrel and released some initial scores, and so it gets even more involved in terms of our analysis. So we do have data scientists, we do have predictive analytics that we use as an input in the investment management process. And as Mike said, we have 7 models, and one of them includes weather.
Right.
What's the weather been like in each region over the course of the growing season? So that is just one other input into quality, which therefore translates, generally speaking, into price appreciation, right? So your risk obviously is that when the wine does get to bottle, it may not meet the expectations of the market. It may not meet the critics' scores, and they can regrade it, potentially regrade it down once it's in bottle. And the other part is that the initial pricing by the producer might have been too high.
When do you know that? When do you know that pricing in the premium?
When do you know it? It's through the on premier season, we'll call it. So the first price was released, I'm going to say, about a month ago, and it was a good price. It was Cheval Blanc, which you'll be familiar with from Bordeaux, of course. And this is a wine that's scoring right now, quite well, 97 and 99 points. And it was released at only 2.5% higher than last year's release price. So we thought, great, that's excellent value. And then various houses release over the course of those next few weeks, and they're still releasing. So we keep an eye on it.
So the risk there to the investor is that it goes, you buy the futures based on whatever analytics, and then one of those variables goes wrong, which will always happen. You can't get it right all the time. And you end up getting paid, you prepaid, and now you get a box of wine that is 20% lower than market. And so your options there are, this is where I get kind of confused with the wine market, because generally speaking, fine wine ages like a fine wine. It just gets better over time. So it's almost like you just need to wait, or I guess the other option is to sell it and go with a better lot that's coming up. So is that kind of like that? You could buy a lot that's underwater for 20% and kind of know that it's going to appreciate over time. Is that kind of the idea?
I think that's fair to say. When you're talking about Cheval Blanc, I mean, it's an iconic wine. Over time, it will appreciate. There's no doubt whatsoever. And so you're right. And we do, therefore, our program is for an investor is separately segregated managed portfolio of wine. So in other words, you own the wine. It's your physical asset. It's segregated. It's ring fenced. It's yours. So as an investor, you can choose to give us discretion to manage that account for you. You can choose an advisory account so that we consult with you on every buy or sell. Or at any time, you can take possession of that wine. So you have a few options there. And what we recommend investors do from a duration standpoint is, if you're in it for investing, you should give us a minimum of 3 to 5 years per position, ideally 5 years. So that smooths out some of those issues, Rod, that you're talking about. And when you look at the economics of wine, it tends to, this is generalization, but it tends to appreciate for those first sort of 5 to 8 years. And then it plateaus for a period of time. And then consumption takes away supply. And then it does this again.
Interesting, of course.
So you've got to keep watching your positions because there's no reward. You got to separate your wine drinking mind from your wine investing mind. So there's no reward to holding on to a wine too long from an investment perspective, because there'll be a point where the risk reward is going to get too high. You don't want to hold the wine too long and have it go vinegar on you. So we're very careful to make sure that we're making the calls at what we believe to be the right plateaus, where we think that your risk reward is now at the stage where you should exit the position. But let's say it's a wonderful Cheval Blanc from a great year. We say 15, 20 years out, let's sell. We sell it. And the buyer, who's a wine drinker, might say, gosh, this is great. In 10 years, I'm going to drink this.
Right.
So got to keep that in mind.
So Atul, this is a great point. Who are the market participants? Because you can see this actually functioning like the initial futures market is there. Great. I'm buying a future. So I am allaying some of the concerns for the wine manufacturer. They get some of that wine sold and off their books, capitalizing their future production. Then I buy it, but then I'm going to sell it. Maybe who am I selling it to? A restaurateur, potentially another wine collector, someone who's going to have a great wedding and wants to have the Cheval there at the wedding. Like, who are the participants that have the predisposition to want to buy the wine as it traverses upon its sort of conveyor belt of age?
Right. So, and I should say, the futures portion of our inventory it's not, I don't actually know off the top of my head, but I'm going to say it's probably about 10 to 15%. So it's not a large percentage. So a lot of our wine is already bottled and sourced from producers. So, but to answer your question in terms of the market, and, everyone always laughs when you say liquidity with wine. The liquidity aspect of it, other than being able to take possession at any time and drink it, is quite interesting. So for us, the profile of our investors, I'd say generally are emerging high net worth, right, or ultra high net worth. And so we have 2,500 clients globally. And the first place we look when we're exiting a position is within our own client base. So it may be that you're an investor in the UK, you're holding Lafite 2000, and you say, now's the time to sell. Well, we've got a lot of buyers in Hong Kong or Shanghai who would be very happy to take that case of Lafite into their portfolio. So the first place we would look is there. Secondly, we look to merchants. So we have a lot of relationships, large merchants, many of whom you'd probably know if you've gone to the UK and poked your nose around some of the wonderful wine stores there. So merchants. And then the third, which is very fascinating, something I knew a little bit about, but I've learned a lot about in the last year, is there's a stock exchange for wine, and it's called LIBEX. So in the UK, in London, there is a market and exchange for fine wine, and it serves a lot of really good purposes. With my lawyer hat on, when I was doing the due diligence, obviously as an alt, you want to make sure that there's a good way to price these bottles, these cases. And the great thing is we use LIBEX pricing. So we've got an independent third party. And as a client, you log in and daily see your updates on the valuation of your wine as indicated through the trading of the day at LIBEX. There's over 500 merchants. It's not open to individuals to be members, but there's over 500 global merchants who are members of LIBEX trading these positions. So that's the other place where we can go for liquidity. And we haven't gotten into the issue of costs and returns and all of those things, but we don't charge clients on the exit. So when you sell your position, there's no charge to the client, there's no commission. So we go through those avenues, and if there is a cost to liquidate through the live-backs, we'll eat that. But the great thing there is, again, you get independent pricing, and unlike a number of alts, you can exit if you need to.
Right. There's enough
It's
liquidity.
it's by no means an arbitrary pricing of the wine, and it's not an auction. It's not to the highest bidder. Not in the old fashioned sense of an auction, but in terms of having an exchange, you have an ongoing pricing mechanism that you can refer to. I wonder how many people
That's
actually
right.
know that.
So, yeah. Well, as a client, you would know that.
Yeah.
We'll let you know that
The right people know.
every day on your statements, which is great. So you get a really good sense of where the market is valuing your position. What we don't do is we don't sell through auction. So, and the main reason for that is that when you sell through auction, you will be subject to much higher commissions. And so for us, it doesn't make a lot of sense because you may get a bump up in value, maybe, but it may not equal the commission you're paying, and you may not even.
Yeah, so that's interesting. My wife worked for many years in an auction house in Toronto, and I do remember having conversations about the wine auctions and how irrational those particular auctions gone, right? Because you always get a couple of wacky players willing to bid up things at to exorbitant rates, and oftentimes it did offset the large commission that the auction houses had. Not always, but of course, it's always the most irrational place to be in terms of buying, right? When you're there in the heat of the moment. We've all done eBay auctions. We know how it is.
Yeah, it's like art, right? What's the value of it? It's the value to you.
Okay, well,
Why?
yeah, but I guess that question is generally speaking, the commission
I know it's hard for
big to outweigh the irrationality. Is that what you guys have found?
Yeah. Yes. And it's funny, my wife worked at Ritchie's auction house as well.
Okay, my wife probably knows your wife. She was at Ritchie's.
Mm-hmm.
Yeah, we should
probably would that. Yeah, back in the day. So when she started in art and went over to
right. Okay, well,
yeah. So, and on that point, it's hard not to get really excited about wine as an investment on a couple of different angles. One is the, sort of the initial rareness of the production stream. The other is that emerging high net worth class, or, call it medium high net worth even, because you can enjoy some of these bottles of wine on special occasion and things like that. Even, if you're sort of, sort of the general high net worth, if you want to call it that. Where are you saying? So I'm assuming there's restaurants, there's merchants, there's the wine resellers. But the thing that fascinates me as a potential burgeoning area of growth has got to be, or what's your opinion on the emerging market and the wealth that's accruing, whether that be in Latin America or Asia or emerging Europe? Are you seeing the sort of replication of the European habits and the fondness for fine wine? Are they replicating that Western feel? And are you seeing, outsized demands coming from those areas? And if not there, where are you seeing some?
Yeah, great question.
In the market,
it's just like any other good, I would say, luxury good wine that's sort of in that profile, like say even at the medium net worth stage, you can splurge on a bottle or a case and enjoy that. So to answer your question, yes, we see a lot of demand from Asia, and cult wines, as I mentioned, started in the UK in 2007, and I believe it was 2015 when Cult opened its first Asian office, and now we have 3. So you do see a lot of demand from regions or countries where traditionally they might not have had as established a wine drinking culture as the UK or North America. And so that is definitely a large source of new business for us. And there's another element. I thought this is what you were going to ask me. But there's another element in there as well, which is in some regions, there's a tradition of investments, which are sometimes also viewed as trading. And so we do have purchasers in Asia who will set up accounts with us and ultimately view them as trading accounts. So it becomes, becomes a business for them in their own jurisdiction, let's say. So yeah, it's quite interesting to see that not only geographically, but also from a net worth standpoint, as more people around the world increase their wealth, they do tend to venture into things like learning about wine, maybe wine appreciation, enjoying fine wine. So the market's constantly growing as far as
it was interesting to see. Yeah, I'm just going to say it was interesting to see that Bernard Arnault is now the wealthiest person in the world, at north of Jeff Bezos, and as the chairman of LVMH, and a big component of that, of course, is fine champagnes and fine wines. And as part of that, just to go back to what Mike was saying about the demand, the thirst for luxury and luxury brands, wine sort of falls into that category, doesn't it? It's coming into that category of fine automobiles and fine clothing and fine wines, that the emerging wealth in the world is hoping to partake in. So makes it not a big surprise to see Bernard Arnault become the wealthiest individual. It was a surprise to me, but that he sort of snuck up from nowhere, and relative to Jeff Bezos and Elon Musk, but Elon Musk sort of came out of nowhere as well, I guess, in the last year. But I thought it was interesting that LVMH is what propelled him to that status.
Yeah, I agree. Yeah. They have a nice portfolio of champagnes and wines, as you know, and that is all part of the brands that they have, under their care and ownership. So, absolutely, it's been an interesting ride to watch that. I mean, I think they sort of switch every week, don't they? That's 3 or 4 people up there at the top, But the other interesting thing I'll mention in terms of emerging markets, so we talked about the size of the fine wine market. One of the interesting things has been in certain wine producing countries to see that there are some wines now being deemed investment grade. So in Chile, especially, and I always find this funny, but talking about Germany and Spain as emerging markets when their history of winemaking goes back so far, but they are considered emerging markets. But when you look at some of the wines that are being produced now, because of better technology, better methods, more sustainable practices, you're seeing wines being produced that are spectacular from these regions. And so there's a few names in Chile that have seen, hundreds of % run-ups over the last few years. So it is interesting to watch that, because we do have good relationships with some of those producers. And therefore, when you're thinking of traditional portfolio allocation, if you're interested in growth, there'll be a sleeve that we would actually look at with you that would include some of those names.
Sure. You've got your Johnson & Johnson in your blue chip, which is your Bordeaux. And then you're going to get your, venture capital, COVID curing, something or other that's going to be the Chilean upstart who is not an investment grade, but moving to an investment grade.
The scrappy upstart.
Yeah. Exceptional returns there.
So that's kind of,
I think one of the wineries I watched that happen to was Caymus. Caymus went from, in my lifetime, went from an obscure wine to, having some investment grade. I don't even know if it's investment grade, but some incredible options.
I just had a question. Let's talk about the portfolio. You mentioned you're providing a
Sure.
Okay, before we go to the portfolio, Rod, I want to come back to, because this is pre-portfolio, right? So you've got to assemble a portfolio, but how are you going to dissect the wines? And you remember us having the conversation about Orly Ashenfelter, Dr. Orly Ashenfelter from Princeton, in the book Super Crunchers. Remember he had the formula, sort of winter rain plus, I think it was heat units in the summer minus harvest rain equals, this thing. And it had a really great predictor of what the vintage years were going to be. And this is going back to 1990. I think he published this, and it gained steam through the 90s. So you have this way, an algorithmic way. So we're, as you know, we're quants. We do everything quantitatively. So we like quanti stuff. So we have that initial, thing that happened 30 years ago. So we got one, how do your algorithms sort of deviate from the market prices? How do you spot opportunities? And then I think the next question is, how do you build the portfolio? So maybe talk a little bit about the algos and what you guys do and where you guys see the divergence maybe in your algos versus what the market prices.
This is like Moneyball for wine, isn't it? Absolutely.
You betcha.
I love it.
Exactly.
I love
that. Well said here.
Ashenfelter was absolutely that. Super Crunchers, I think, came out of, sort of the Moneyball interest back in the,
It's very interesting. He obviously created quite a stir with the wine world. And I think I've heard some names that Robert Parker called him, but I'm not going to repeat those here. But all of that said, it is kind of an interesting formula to that he came up with, Ashenfelter. We have a lot of inputs. And so there are a lot of factors, obviously, that influence the price of wine. Brand, producer history, vintage scores, critic scores, when are retastings scheduled, just you can go on and on and on. And so, we have a lot of those inputs that we put into our models, right? That kind of help us identify where we think the market is presenting an opportunity. The other part is, as I mentioned, going straight to the producer, we're able to negotiate pricing as well, right? So we have an idea of where we think market is, and if with our scale we're able to negotiate better pricing, then we have an advantage that we can pass on to our clients as well there. So the quant side is quite interesting, and yes, it's an important input, but we also have a qualitative side, so that with our relationships with the producers, with our buyers on the ground in all the major wine regions, we're constantly talking to the different people in the ecosystem to, understand how the vintage is going to be, what percent of supply or producer is going to release to the market now, what are they holding back? So that there's a lot of those sort of qualitative factors that we consider as well. And then the final piece of it is the macro piece. And in that piece, it's important to keep an eye on factors like tariffs. And very interesting, you can go back and look at when the Trump administration put the 25% tariff on because of the Boeing Airbus dispute. There were various wines in France and England and I think Germany that were impacted by the tariffs. And for some reason, the administration exempted champagne. So what you saw after the tariffs was Bordeaux coming down in price because American buyers weren't buying the same quantities, but Italy and champagne going up for 2 years. And so there are those factors you need to consider as well. And right now, China has tariffs on Australia. So you need to watch the prices of the iconic Australian wines, because China is a big buyer of Australian wine. And
load up on the Grange.
Right? So that's a wine that you could, hold sometimes for 40 or 50 years.
Yeah.
for drinking. But so those are all factors that we'll consider when we get together as an investment committee, and also that sort of feed into our informational systems when we're deciding, where our portfolio allocation benchmark is going to be. And, as you said, which wines would still be the blue chips, and what should we be considering value,
Right.
small cap.
So on that, so you're looking at the whole spectrum from small cap, mid cap, large cap, i.e. like iconic names, up and comers, and then maybe some flyers. How much liquidity is in that portfolio? If I had a couple of $1 billion to send your way, at which point would you say, okay, that's enough? Let me figure. I mean, when I send you a couple of $1 billion, what do you find the liquidity in that type of wine portfolio?
You get all the wine.
Yeah, I think you're asking two questions. One is capacity and the other liquidity, perhaps. So capacity, it's a good question. I mean, we're at 300 million and our goal is to get to 1.5 billion in the next sort of 3 to 5 years, probably 5 years. So we think that we can manage that amount. And there are, in my view, there are two hurdles, let's call them, or issues that you need to solve for in order to get to that size. One is access and supply. So that's where all of the work that we're doing with producers and continuing to develop those relationships, developing relationships with producers in these up and coming regions. And by the way, also the emerging markets sort of sleeve of your portfolio could include new producers in Burgundy that are, might have been making wine at a particular producer, have now struck out on their own and are getting good reviews. And it's still early, so you can still kind of get in at reasonable.
Just like the hedge fund business.
Yeah. So that's part of the equation. The other part is the liquidity, as you pointed out. And so again, I'm personally not as concerned about the liquidity side as I am the supply side. And on the liquidity side, again, as we keep increasing our number of private clients, and again, it falls right back into that supply and demand equation where there's going to be an outlet for people who want to exit. And hopefully with demand increasing, the exit prices are going to be ones that we want to see for the wines that we're getting our clients' portfolios and building them with. So the other thing, I think we've estimated there's about, in US dollars, about 20 billion worth of wine being held in storage globally for investment purposes. So there are obviously other investors. And then if we got to the secondary market, we estimate it's about 7 billion turnover per year. So, there's avenues for liquidity that at this stage we aren't accessing. But
in terms of the bottle market, Atul, how much competition are you facing in getting a worthwhile supply of your, desired bottles?
I'd say we're growing in our ability to secure the bottles and supply. It's been very interesting. When I worked on my initial business plan, part of the plan was to set up a capital fund to actually buy to buy wines from producers. Because if you think about it, during the first part of COVID and probably still now, a number of producers as well as agents were tied to restaurants, and restaurants just weren't buying their allocation like they had in the past. And what that did was it prompted a number of producers as well as agents to realize they need to develop their e-commerce business as well as their direct-to-consumer or private client business. And so the thought was to speak with producers about buying allocations, but then guarantee that we'll buy the same amount or more for the next 4 to 5 years. So this is a way to help out producers because they're getting some certainty in terms of cash flow, vis-a-vis sitting on inventory till market conditions are better. And on the flip side of it, as I've said, a lot of producers that we're speaking with have realized that there is value in having more distribution through the private client network. And fortunately for Cult, because of our relationships that we've developed over 13 years, as well as people coming in like myself, we've got some relationships in France. And you're able to kind of have that rapport with producers and hopefully kind of continue to increase the allocation that we get. So that's
So clearly this is an idiosyncratic. Sorry, go ahead, Mike.
So in this,
Clearly this is an idiosyncratic asset class with unique variables, timelines, when to drink, when things peak, how the liquidity works. When putting together a thoughtful portfolio, what people are looking for is for that to show up in their statements, right? Things that are zigging when the other things are zagging. Have you guys analyzed the correlation of wine or your wine portfolio to traditional and non-traditional asset classes? How does it fare?
Yeah, we have, and I can speak mostly to equities. So, like a lot of all classes, one of the benefits of it is the non-correlation, or I should say low correlation. So, the numbers that we've done, we use the LiveX 1000 index as our comparison to the S&P 500, to the TMX composite. And, speaking broadly over the longer term, so longer term being 5, 10, 15 years, the correlation to the S&P 500 is very low, it's about 0.08. And the correlation to the composite, the TMX comp, is a little higher. It's about 0.28-ish. So still low correlation, but more correlation to the commodities driven exchange versus the S&P 500. So you can really show the benefits of correlation or low correlation to your portfolio. And the other, a couple of other merits I just talked about is low volatility. Again, compared to the S&P 500 over the 5-year period. So as measured by standard deviation, be about 4% versus 14, 15%. And so that's another real advantage. And then finally, we may have talked about the low asset capture, but if we didn't, part of the mechanics of the market, again, in terms of who the buyers of these wines are, you see that when there are markets of equity crashes, flooding wine barely budgets. So during the GFC period, we saw for the year S&P 500 coming down 38%, and the LiveX 1000 came down less than 1%, 0.6%. So, a lot of the buyers, certainly our clients, they
might be panic drinkers. That's why there's so much, there's a lack of supply. Breaks a good for depression led by recessions.
Yeah. Alcohol and cigarettes, things you buy.
Right. It's taking a long-term view, and it's a classic asset to have that view. And if you have the ability to withstand some of the volatility that you see in the equity markets and hold, so you're going to be better off.
Who do you think Cult Wines is sort of replacing as the buyer stepping into the market? Is it so certainly through COVID, it's kind of interesting to see, okay, the restaurants were not buying and then people were buying more for home consumption. But longer term, do you see the Cult Wine sort of market player or other groups like this one who are facilitating the investment in wine growing, or are they going to replace the wine shop opener? How do you see that progressing?
Good question. I mean, again, with a lot of these wines, there is a lot more demand than supply. So obviously that gets back to the access question. So it's really hard to predict as to, how that pie is going to get cut up in 5 years' time, for example. That said, in terms of competitors more in the investment space, again, there would be competitors in Europe and Asia. In North America, not so much in an organized way. But very interestingly, what we are seeing in the US is there is a growth of essentially wine robo-advisors. So there's a couple of reasonably well-backed platforms that have started up. And I would say they're probably a little more geared to millennials than to our traditional client segment, and quite likely not as well organized from an investment perspective as Cult Wines is, just over the years having the history and track record. But it could be that that's an area that's going to grow, and that might be a whole new area of full competition.
And the industry itself can grow as more participants come in and are willing to fund, the development of really great wine that has the ability to be aged. You're going to see, Chilean projects, you're going to see Argentinian projects. And as you say, you're going to see infilling in Europe where they've got great weather and great soil and just doing more with it, with the technology that's there.
That's right. Yeah. When you look at the trading on the LiveX, so since 2010, Bordeaux as a share of trading has halved. And if you look at what's considered in the rest of the world category, and this is the Spain, Germany, California, Chile, Australia, they've gone from somewhere around 0.9% to 7 or 8% or 9% of the market share. So you're absolutely right. We'll see more wines being considered tradable or investment grade as time goes on as well.
The fading of the Bordeaux dominance. Having said that, do you think there'll be any other futures markets or any other en-premier markets that develop out of that? Something in Italy would seems to make sense. Even in Rioja in Spain would.
Yes, it's possible.
They don't seem to have happened.
Also, there is a Burgundy or Premier program as well. But yes, I can see other ones developing. And one area of wine that I personally didn't know as well was German wine. And in fact, there's a lot of really great German investable wine. The thing is, a lot of it just never leaves the country because it's made in such small quantities. And it's not an premier program, but they'll have barrel auctions. And some of these wines, there's only 1 barrel or 2 barrels.
I find Australia like that. If you've been to Australia and you have a wine in Australia, you know that the good play in Australia does not leave that rock.
So, our goal is
oh, really? Really, really, really?
Our goal challenge is to try to obviously develop relationships and access some of those wines as well that are already being made, just harder to source.
Yeah, well, they become in such small.
So just to be clear, in terms of investing, liquidity in the portfolio, it's not a fund. It's basically your separately managed account, right? You go in, you say, you have a minimum, and you take people's money and corral off their wine somewhere in an undisclosed location with security guards. When are you launching the BMO ETF, the BMO Fine Wine ETF?
Deep in a mountain in Utah.
I'm sure it's happening like this.
Not a matter of time.
To take your first question first, yes, there's we have a storage facility. It's the 28,000 square feet, and it's a former Ministry of Defense hangar in the UK. And it's there's a third party called London City Bond, and they run an incredible network of bond warehouses all across the UK. So they warehouse they have 2 million square feet in warehouse, about 8 million cases of wine. And so they run our facility, and we share it with some of the, there's another hangar that some of the large merchants use as well in the same space. So it's temperature controlled, it's humidity controlled, it's light controlled.
Insurance?
Incredible security, of course. So that's part of it. Yeah, insurance through Marsh McClellan. Then that's our insurance called Wines Insurance. So those are the things you get when you invest with Cult. So all of those logistics and the perfect storage and guarantee.
Is it duty free?
This is all take.
Is it in a free zone?
It's,
Yeah.
Yep. When it's held in, when it's held in,
No, when you bring it to Canada, it isn't.
when it's held in bond, there's no VAT tax rate. So that's right. When it's taken out of bond, the VAT tax is applied, the 20% tax, and there's no duties until it's taken out of bond, and then you have to take care of the duties involved. So that's where it's stored. And in terms of the wine ETF, it's interesting. I don't know. I don't know that it's something that's easily done. And from a hedging perspective, like just having thought about how you would hedge something like that. All that said, the interesting thing with my background in ETFs, the interesting thing was, finding a way to make the asset class accessible. And actually, it's an area where, we've proven the value of active management. So it's kind of a neat thing where you still have the opportunity with the analytics and with the relationships to outperform the market and the indexes. So I think it's a great area we can prove
Very cool.
the value of active.
Now, one more question. We do have to ask the question about the the great wine fraud, the Rudy Kurwiniwani. I forget, can't even pronounce his name. His name is not going to pass my lips. Anyway, obviously very large wine counterfeit ring, and not easy to do. I mean, if you're going to have counterfeit 82 Petrus, that actually takes some work, because you can't bring that to the table and not have it taste like the 82 Petrus. So there's an elaborate set of the things that you would have to do in order to counterfeit really fine investable wine. So it's not that it's easy, but obviously the financial reward is there too. So how is Cult Wines approach that? How are you guys approaching that? I mean, certainly sourcing at source yourself helps, but is that exclusively what you do? You're only getting at source, or how do you hedge that particular?
Right. Yeah. Great question. Absolutely. So first off, the best way to avoid fraudulent bottles is to source directly from producers. And so, a very large percent of the wines that we have come from the producer directly. So we are fully involved in the entire chain from producer to our storage facilities. So that's number one. Number two is reputable merchants and negotiants. And so that's the second part of the relationship building, is there are a number of brokers in the ecosystem, and France and Burgundy are two good examples, where the producer will use their brokerage system to distribute the wine. And so that's the second place where we develop relationships and buy. So you're one step removed from the producer, but you're really with the producer's agent. The third place is reputable agents. And so there'll be allocations made, obviously, from these producers to agents in the UK or other countries that we have relationships with. So we'll buy allocations through them. The last point is where we might source from a relationship that we don't have directly, but that we have very good references for. We have a risk profile system, and we have authenticators at our facility. So any wine that's coming in that doesn't fit our usual way, which would be the first three ways I mentioned, gets put through the risk profile, and it will only be accepted into our storage if we believe that it is real. And so the interesting thing about that is that we've got right now 650,000 bottles under our care, under our management. And over the 13 years that we've been operating, we've never had one complaint of a fraudulent bottle. And so that's a record we want to keep. But it's clear to our clients that if any fraudulent bottle were ever to make it through all of those screens, our policy is we'd replace it if we can locate the same bottle in the market, or we credit the client for the then value of the wine. So, we take it very seriously and have been obviously fortunate as well as because of
So do you have any portion of your portfolio that is not stored in your facilities, where you're buying a few lots in another facility that you trust or hope they're doing a good job? Does that work as well in your business?
Yeah, it does. With those things, you're always very careful. Just like when we accept bottles into our storage, we'll need all the papers. So we need to go over where was it purchased, when, who's held it in the chain of ownership, where has it been stored. So all of those things need to be done. The answer is yes, we could do that. And usually when you do, it's from in bond to in bond, and we'll have all of them as details.
Got it. I think blockchain would tell
provenance.
all these things. It's crazy how we do that.
Well, I think that there's reasons why certain industries don't do such. Like the diamond industry is also another industry that would do very well with that type of thing, and it's interesting. The wine industry has moved more to a public market industry over the last 20 years, but it's a lot of art in there and a lot of differentiation in the.
So on that point, I can't get into all the details, but one of the things that attracted me to Cult Wines was just a vision for the global business, and already being the leader in the space with a lot of room to grow. We've got a number of projects underway, and I can say that blockchain was figuring prominently in one of the projects, and there's a whole lot of there's a whole lot of great applications, as you point out, Rod, for blockchain in the industry. And obviously developing the asset class for us, a lot of it is meeting some of these issues right away in a transparent way, right? And if we can improve the ecosystem, a couple of things. One is we think that as an asset class, obviously it gains more credibility, and that's what we're here to do. And secondly, quite honestly, it improves the value of our clients' wines. So if you can do something that makes the industry better and more transparent and increases the value of the wines that Cult is involved with for your clients, it's a good thing.
Yeah, can you imagine on Rodrigo?
Well, not only that, but you can have the wine futures. You can have the actual portfolio on that you create. Because one of the issues that we've discussed over and over again, Mike, is this: the boomers got rich by buying very cheaply, low entry to first purchase of a house, low entry to buying stocks and bonds, and they just average cost or wine. Yeah, there you are. You got your wine selling.
All the wine.
And so over time, they just kind of made money without even trying. Whatever, I don't even know. Like you actually look my age. What are you, millennial? Or you're a geriatric millennial. I think that's what they call.
Geriatric millennial.
Yeah. So the
geriatric Xer.
The issue now is that people my age or younger that want to get into this wines or diamonds or houses or luxury, anything is nearly impossible barrier to entry, right? So when you if somebody's able to put that into some sort of sharded crypto market where anybody can own and participate in the growth of that, it would be fantastic. I think I'm sure you've thought about it, and it might change the landscape and provide some hope for younger individuals like me.
So we've come out in Canada with our first offer, which is portfolio managed. So you get an actual portfolio manager with advice, and all of those great things. It's really good. It's $45,000. So it's, it's accessible, but not bad. But for people just starting out, or, who want to dip their toes into it a little bit slower, we're doing a brand refresh, and we'll have a new website and investment platform, which is going to bring together 2 or 3 different systems right now that we need to bring together manually. So it's going to make our portfolio managers' jobs a lot easier. But with that, we'll roll out a product at the 15,000 to 45,000 level, which will be more automated. So we're hoping kind of late summer to be able to roll that out. And we've had a lot of people express to us that they're very keen to kind of invest in that 15, 20,000 range to get started. So I think
right. It is just like, I guess this is a security, right? So it's not like accredited investors only. If you have the money and the inclination, you should be able to get access to your portfolio.
That's correct. Yeah. That's right. Now we would still do just like
AML and all that stuff.
We'll do some KYC and ensure that, the portfolio, and the portfolio that we're building, meets your risk profile and your time horizons. And then,
so are you registered as an advisor or like a PM? Well, how do the regulators see you?
We're not registered. We're not required to be registered. So we're offering buying and selling of a commodity, which is wine. And
right.
We talked about the futures. It's not a commodity futures contract. So there's no requirement for registration. And that said, we do have obviously internal controls and a finance and operations group, and we do third-party reconciliations. And I talked about independent valuation. So all of that is very important. And again, for me, with my background as well, coming in, a lot of those boxes through due diligence for me were all check, because it's very important to have those internal controls.
What's the key differentiation in the regulation that allows you to fall outside of, securities regulation, just because they're not finance?
Yes, it's not. Now, if you created an investment fund structure, it would be a security selling.
So you're separately managed.
The seat or
you need to partner security resolve in order to provide security. Here's another. This is I love we're hitting the leg of this, but I'm curious. You focused on wines, and there are some sister spirits that exist out there, and I don't know what their market dynamics are. So you got the ports. You got the Armagnacs, the Scotches, all that stuff. So how does that world fit into your world, if at all? And if you have any knowledge about, they will come down in the same path as you someday. It'd be interesting.
Yeah, good question. The one sort of obvious area would be Scotch whiskey. So the returns in that space have been very good. We've talked a bit about it internally. I mean, our expertise is wine, our relationships are wine. So we're really focused on the fine wine area, and we do have, we believe, a lot of room to run. But that said, one of the things when we have talked about Scotch as well, though, is there's not the same price discovery mechanism that we feel LiveX gives fine wine. So when you do kind of hear those headline numbers regarding Scotch and Scotch barrels and those sorts of things, a lot of them tend to come from auction and maybe even private sales or what have you. So, for us, unless there was a way that we felt more comfortable about the price discovery and valuations, it just doesn't fit what we're doing right now. But that's not to say that it wouldn't. And to be honest, I don't know a lot about pork prices, so I don't know. But what I will say is, interestingly, the stickies, as we call them in the wine world, they're great wines, but they don't follow the same sort of dynamics of fine red or fine white wine. So you might find even the greatest, some people will say it's the greatest wine ever made in the world, Chateau d'Yquem, and it is an amazing wine. But when you look at the prices, they can kind of go all over the map. And even if you look at auction prices for Yquem recently, you might argue there's deals there if you're in that sort of snack bracket. So the stickies are a little bit harder to kind of analyze and not as predictable.
Yeah, there's a certain reliability to the aging out of the tannins and the acidic nature of big red wines that come from grapes like Cabernet Sauvignon and Sangiovese and Syrah. There's actually a reliable degradation of the tannins, which then promotes that smoothness and maturation of the wine. And it requires time. There's no shortcut. It requires the wine to be laid at the right temperature in the dark for a number of years. And, that's the vig that you're getting to put it down. That's why you have your own cellar. That's why you do that. Because oftentimes when you want to go get that 1990 Bordeaux, it's not at the store. Like, it can't be bought. It's literally not possible to buy it. And so, you're stuck with this conundrum. So just like you say, Rod, when you talked earlier, I bought the futures and it turns out they were 20% too expensive. It feels like I bought Bitcoin in January. Now, maybe there's a maturation point. Now, that's probably a bad example, but you're buying something for a long-term sort of return. And part of that return comes from what is a structural evolution of the way a wine grows into its sort of optimal, enjoyable period after 10 years. And, the price is higher at that point because there's less of it around. Some of it's been damaged. Some of it's gone bad. Some of it's been consumed. And that's where you get that next price appreciation where, the swarms of people who like to drink a wine prematurely.
It helps.
They shouldn't. They do. Yeah, it helps the pricing for the later one because,
I feel like that was directed at me. Like, that's exactly what I would do.
The next round of buyers.
Get the portfolio and start drinking at the early on.
Wine. No, I don't bring any.
So just going back to
stuff around for you.
To using this as a class, as portfolio construction.
It's not directed.
Talk a lot in this podcast about rebalancing and not correlation and putting the right pieces together. And rebalancing requires a level of liquidity. So let's say if I wanted to rebalance my portfolio on a quarterly basis, and it'll be a portion of that portfolio, how easy is it for me to buy a portion and sell a portion of my portfolio with your company?
Yeah. And yeah, you guys do a great job of the global asset allocation. And obviously, you take a really good holistic view of a client's account, which is excellent. And in terms of, rebalancing, again, as we kind of talked about earlier, in terms of liquidity, it would depend on, it depends on the dollar value of the wine that you want to move and at what price. And so, that's where the benefit of working with a company like Colt comes in, because we can have those conversations with you and, we could agree essentially a reserve price. And then we would go out there and give you an indication of the time frame for us to work that into the market, just like we would in other sort of small cap scenarios, where you want to make sure that you're not having too great of a market impact, but you want to working in at the prices that you want to achieve. And so we work together with you on that.
No pun intended.
It would be on a case by case, but definitely.
It's so good. It's so good.
This is the area is rife with puns. But that's right. So I would just say we could work with you on it, and we could do it. We just work.
So what do you worry about could go wrong with this? Like people in the wine investing circles, what is it that keeps them up at night, or what is it that they consider looking forward, that they could head off at the pass? What kind of risk management, and what risks are you actually managing?
Yeah, I would say from an investment perspective, that's where our investment committee comes in. So, we have a benchmark allocation, and we try to have our portfolio managers get to. You don't want to move everything too quickly, but again, like a lot of portfolios, if you have sort of a view of where things will be in 2 or 3 years, it helps to kind of gradually get there. That's it. We do that every quarter. And so from a risk mitigation standpoint, in investments, it's like any other investment, we want to make sure that you're diversified. So even at the $50,000 level, you can be well diversified regionally as well as within the types of positions. Yeah, it's a reasonable amount of wine, right? At 50. So that would be one. The other ones I think we've talked about, and quite frankly, we've mitigated to the best of our abilities: storage, transportation, insurance, and ensuring there's no fraudulent bonds. So to me, those are the risks, and we believe we've got the best procedures in the industry in place to mitigate each one of those. And then after that, it's just your ability to really manage.
Is champagne part of your
benchmark
portfolio as well?
It absolutely is. Again, when the Trump tariffs came in, champagne shot up like you wouldn't believe. And the other interesting thing is through COVID, the feeling was there's too much production of champagne, and people view champagne as a thing to celebrate, and there's nothing to celebrate. But champagne prices have held up very well. And for us, our view is there's some good back vintage champagne that houses are releasing that we think there's value in, and so we're buyers and allocators there, as well as we've talked about the emerging markets. If you're familiar with champagne, there's a grower champagne movement, and some of these grower champagnes are outstanding at prices that are a lot less than the iconic names. And so we've developed and are developing a lot of relationships with the growers, and that's the other place we would also to put clients into right now.
What is your top wine book recommendation at the moment for someone who's, thinking about this, has thought about it? What do you think is
so in terms of learning,
best book out there now?
Just reading, leave it open.
I'm going to leave it open.
Interesting. Well, I'm going to maybe just throw out 2 books. If you're a serious wine person and want to delve deeply into a region that's my favorite, which is Burgundy, I would pick up this book right over my shoulder, which I got from my wife for Christmas. It's called Burgundy Vintages. Alan Meadows, who Mike, you'll probably know, is the wine critic covering Burgundy. So they covered all the vintages from 1845. In this book, but there's a lot of knowledge in there too about winemaking and storage and stuff like that. So it's a great book. Just coincidentally or incidentally, he wrote it with Douglas Barzilay, who's a very well-known wine collector in the United States, who has recently bought a vineyard on Vancouver Island called Foxtrot or Fox Run or something like that. But anyway, it's supposed to be making some great Pinot, and it's kind of neat that somebody who's so steeped in Burgundy, thought enough of the wine from Vancouver Island to the vineyard. So I haven't tried it. I'm keen to try it sometime. So that's a really neat recent book for wine geeks. Just for interest sake, I would say for people maybe who aren't as into wine, one of my favorites it's still a favorite, is called The Judgment of Paris. And you're probably familiar with that. That was the tasting that Steven Spurrier put on in France for the U.S. bicentennial. And the judges in France picked Californian winners. And there's all kinds of controversy after the fact on that one. But it truly was a tasting that kind of redrew the wine maps. And although, French wine still dominates on the investment side of things, you have seen, like we've talked about, wines from Chile, definitely wines from California who've made inroads and continue to make inroads. But it's a really neat book. And,
he did.
Unfortunately, Mr. Spurrier also passed away.
So, Mike, is Spurrier the individual who kind of had the rating system that led to the California Pinot to be a preferred wine, but it doesn't age well? Was this the one that Raoul Pal kind of raged against when comparing the California?
I think that's Parker, isn't it? Isn't that Jared Parker?
That's Mr. Parker. So
that seems to be the controversial one,
system.
Where it's created a
Wine Spectator.
Yeah, it's just become one of.
Yeah. Anyway, that story to me was fascinating. If anybody's.
Yes.
That if you're interested in Robert Parker, there's a book called the Emperor of Wine, and it's written. It wasn't authorized, although the author did spend time, I think, interviewing Mr. Parker. But it's a really interesting read. And when you think of whatever you think of Mr. Parker and his palate and his rating system, the fact is he moved markets, and he was the person who could influence up or down the price of almost any wine in the world. And, when you think of people in industries who you might point to and say, there's the top person in that industry or that sport, it's hard to kind of come up with a name like his, where he
So here's my question.
Anything or could.
For all the listeners.
So it's an interesting book.
Best value under $100 right now for red, white, and champagne. I don't know. Is that a back when Mike's looking at me like, what did you just say?
Drink.
What's it?
Have a
How should I reframe the question there, Mike? You know what I'm trying to 200?
Have it.
Okay. Well, it's going to ignore that question.
Along the same line. Along the same lines was, what's the top? What's the orange in it?
Yeah.
What's the top?
All right.
Coming.
Fair enough.
Okay, to Rod, have it truly. Everybody else? Yeah. What's the top up and coming house?
Well, I don't know if there's a top up and coming house.
Not the top. In your opinion, I don't want to make you give us a list of 6.
Sure.
Just saying.
Yeah.
What's the outstanding sort of up and coming house? It could be a new region. It could be an old region, like you said. These things are happening kind of in places you wouldn't expect. So, just.
Just some of the names. So again, if we're looking at an overall portfolio, and we consider these as the up and coming, emerging houses. And so just, 2 examples. One is in Burgundy. There's a great producer of Burgundy wines that isn't as well known, but has received wonderful reviews, great scores. The wines are appreciating. Olivier Bernstein would be a great up-and-comer. And then we talked about Chilean wines. So obviously I have to say Senya, which is essentially a Bordeaux blend.
It's Enya with a little squiggly on it at the end.
Yes.
That's Enya, Mike. Enya.
Getting great reviews.
Yeah.
On the A.
And I thought
that's why I wanted it spelled.
Yeah, I thought Mike could pronounce it and spell it better than I could. But it's kind of fun to watch that region. And just to throw another one in, which isn't in any way a new producer, but speaking from my own personal portfolio, it made its way into my emerging sleeve was German wines by Egon Mueller, which are priced well. He's a producer that makes amazing Rieslings, if you like Rieslings, and the prices are reasonably investment grade, but obviously also with an opportunity to appreciate more over the long term, because German wines are now getting more and more popular from an investment perspective.
There you go, Ron.
So
one last one. Is my 2016 Sassicaia going to live up to the hype?
I think it will. 15s and 16s are amazing. So if you've got a case, sit on it.
My 1921 barefoot Chardonnay.
Sitting on it right.
Well, so interesting, Mike. You started with France, and so you're also a Tuscany fan. Then obviously,
I am a Tuscan
Italian. That's great.
Traditionalist.
Good for you.
We have one last question.
Well, maybe
one last question
for having me on.
Technical, very technical question for you,
Mike.
There's one.
Sure.
Okay. This is a good question for a guy who deals and who traffics in things that are, minimum 50 years until they're any
Atul, good. Would you rather spend a week in the past or a week in the future, and why?
Oh, that's a very interesting question. A week in the past or a week in the future? Wow. I guess it would depend on which week of the past, but I think the answer would be a week in the future, and really probably pick a time just to see how my kids have grown and developed over the years, and how we are doing, my wife and I and our family. So I'd probably say it'd be kind of neat to go into the future and see that. Hopefully, come back so that if you had to change things, you could. Or
would you do that?
Change it.
Thank you, Atul. That was great. Very insightful.
That was terrific. Yeah,
what an optimist. Optimist.
Well, thanks again for having me. And I wanted to say, when we're able, it'd be wonderful to get together and actually share a nice glass of wine and that experience.
That would be wonderful.
All this talking about the business and investment side of it.
You can count on that. How's late August for you?
I'm around.
Well, this was awesome. Thank you so much, Atul. That was very, very enlightening.
All right. Well, let's do it.
That's awesome.
Thank you.
Okay.